Well, thanks for tuning into India Market Close to yet another interesting day of trade and bring up the markets for you and just show you what's happening there. It's flat-lined today, but it's a day of consolidation after a trending day. Just that it's not in the red as yet, which is actually a good thing. The bank Nifty will come on your screen, and that is giving support, and which is the point that we made in the morning, that quite unlike yesterday when the markets had support from IT and some of the others and not from banks, today banks were participating, at least when they started off, with as much gusto as the Nifty. What about the broader end of the spectrum? And the mid caps and small caps should come up on your screen in moments from now, those indices, and you will see what I'm talking about. When they started off, the mid cap and the small cap indices had a pretty good going, and about 0.5% or thereabouts for both mid caps and small caps even now, which is actually not a bad sign. And then get the heat map up on the screen and just look at what's moving and what's not. So there is some bit of strength in State Bank of India, 3.5% higher. There is strength in commodities by and large today. If you just look at Hindalco, look at Grasim, look at JSW Steel and Ultratech. So the Aditya Birla Group has had a good move today with all the three names in the top 10 gainers list. There is strength in Adani Enterprises, and actually a lot of other Adani Group stocks are very active today. Just that the quantum of red has kind of come a little bit higher, which is interesting. And IT is sulking today. For all the gains that the index made yesterday, it's certainly come off in the session today. So one day wonder, if you will, and let's see what happens to some of these stocks in the penultimate day of the week after having had such a strong Tuesday. Just one more chart, which is the market breadth, and just see if there is a bit of a decline there before I hand it over to Samina. Yes, indeed, we started off very well, as you can see. I think we coming off from the lows of the day, but still not as strong as the start. However, not doing bad. But Samina, if the Aditya Birla Group is kind of dominating the large cap end of the market, what about the mid cap end?
Adani, I think that's the group name that is actually doing quite well in trade this afternoon. So pull up Adani Total, Adani Green. Those are the big gainers from the broader markets. Now, this is gaining on back of Bloomberg reports that have indicated that Adani Green is in conversation with foreign banks, including a US firm, for its first dollar bond sale since Hindenburg. Now, that is a big news development. Remember, also Adani Green jumped into a profit this quarter, doubling down to 256 crores versus 103 crores that we'd seen for the same quarter last year. So both those Adani Group names actually looking really well placed in trade today, 8% higher and 6% higher in Adani Total. Well, apart from that, you've got a whole bunch of other names, so if you can start quickly pulling those up. A lot of the reaction today is largely earnings based. So what you have is EIH. If we can pull that up, you'll get a sense of what is happening on EIH this afternoon. Solid set of earnings. EIH, remember, operates the Oberoi group of hotels. They've reported strong profits, gone up about 150% on the stock itself in the last 1 year. Operational efficiency has kicked in, which also ensures margins are looking good for EIH. Trent as well, 18%, massive up move on both those players, again on back of very solid earnings. TRF is gaining as Tata Steel calls off the merger. The stock has done exceptionally well in the year. Tata Steel, remember, owns 34% of the stock, but the merger deal or the swap ratio was not seeming very favorable for TRF stakeholders. Now that this merger has been called off, TRF actually having quite a field day in today's day at 20% gains. On the sell side, Sirma, disappointing earnings, big drop in the frontline, headline numbers, on back of which the stock gets a thumbs down, seeing a cut of nearly 8%. NLC as well, disappointing on every front, top line, bottom line, margins, all seem disappointing for the NLC, and the stock gets a beating in today's trade. Has been an outperformer in the recent few weeks, but today, of course, is another story. GSFC, weak earnings, margins deteriorated. You've got top line that doesn't look good, margins under pressure, profitability also not good, and Navin Fluorine. So both of those are also earnings reactions on the downside. So that's largely the texture of the market. Stock-specific trade is what's driving today's session, and those are largely coming in on back of earnings. But Niraj, I think PSU banks are getting another leg up in today's session.
Not surprised that somehow these stocks seem to be maybe at times having indifferent moves, but kind of having more up days than down days. We had Sridhar Shivram earlier in the day, and we'll try and make you hear his views on what's happening and what his view on PSU banks is. But let me first get in our experts on the show. Ajit Mishra, SVP Research at Religare Broking, and Avinash Gorakshekar. He's Director of Research at Profit Mart Securities, joining us on the show. Gentlemen, both of you, thank you so much for taking the time out and being with us. Ajit, let's start with you. And how do you look at the day's trade today? Started off well after a very strong day yesterday, but has cooled off a little bit.
Yeah, good afternoon, Niraj. So, Niraj, this is something that we have been observing for quite some time now, that alternate day of move means one day we are seeing that markets gaining traction with the help of some of these select index majors. The next day we are taking a breather due to the underperformance of banking. Today, we feel that just ahead of the RBI meet, market taking its own time, to consolidate. The good part is that Nifty, at least we are seeing that index has been holding 20 EMA for quite some time. And barring banking, the rest of the other sectors, they are, witnessing rotational buying, in every alternate day. So, index, I feel that still we have multiple resistance to cross. That the major hurdle is still around 22,150. Until we break that, zone decisively, I doubt that there will be any meaningful up move. So, consolidation tone is likely to continue, is what charts are indicating, at least in the near future. But since the tone is on the positive side, one can continue with buy on dips as long as we are holding about 21,600.
Buy on dips as long as we respect 21,600. That's the technical view. Avinash, two consumption earnings that I want your view on. Britannia, it opened with a gap up. Numbers on the face of it look disappointing. The management commentary was very promising. And Nestle, on the other hand, numbers have misread expectations. What are you making of both these counters, Britannia and Nestle, on back of earnings? Would you be a buyer?
See, I think as far as Britannia numbers are concerned, the commentary may have been slightly better. But if you look at the numbers, nothing so exciting in the sense that, one could expect a very significant amount of re-rating. We still believe that, urban markets as well as rural market demand is still pretty soft. And I think the management has reiterated that possibly, coming quarter or maybe the next couple of quarters, we could see some sort of green shoots on the rural market side. So that is definitely a big positive, because that could actually, increase the volume growth. But I think overall numbers were not exciting at all. In fact, in terms of valuations, I don't think, there's any hurry from our side to actually go and recommend a stock. We would prefer to wait for a correction. As far as Nestle is concerned, again, the street was expecting a very stellar set of numbers, but what has come out is below the market expectations. So I think despite the fact that numbers have been good on the face of it, what kind of volume growth and what kind of growth trajectory the management points out in the coming quarters is very important. I would still be a little wary, because, these are expensive stocks. In fact, Nestle is also not trading cheap. Probably we'll wait for maybe some more clarity before we decide. But definitely in this entire earnings season, FMCG companies have been a kind of a very, soft kind of performer. You look at Hindustan Lever, you look at Dabur, Godrej Consumer. I think all these companies, they've not been able to capitalize on incremental demand, which still, from the rural pocket continues to be weak. So at best, we prefer a hold. I would not suggest any fresh buying, at least at these levels.
Right. Ajit, quick word on PSU banks. They seem to be witnessing a leg up in today's day of trade.
Yeah, that's right, Samina. So, in fact, in this entire underperformance that we've seen in the banking, the PSUs are on a different trajectory altogether. We are seeing the index making a new record high, and the laggards, which were not participating in it earlier, with every passing day, we are seeing 20-30% kind of a move in some of these names. So, but now I feel that slightly overheated, especially some of these names like UCO, IOB and all. So, within the PSU pack, SBI is one candidate wherein we still see stability, and the kind of move that we are seeing with volumes today. We expect still we have a room of around 5 to 8% in the current levels. So, SBI is the only candidate in case if somebody is looking for any fresh bet before the RBI policy, and 650 should be a stop if we are planning any trading in a position.
Avinash, EIH, 18% gains in trade. They operate the Oberoi group of hotels. Stock itself is also up about 150% in the last 1 year. So tell me, what do you think about EIH and also Lemon Tree? Because while EIH did exceptionally well, Lemon Tree's earnings are not being appreciated this afternoon.
I think, see, basically, AIH is an old player in the industry, and I think you've been right that numbers this quarter have been extremely strong. My sense is AIH has always been a kind of a player which has operated in the five-star and in the luxury segment, and I think that is one segment which has done remarkably well. They have also announced pretty good expansion plans to diversify into new markets. So I think AIH, despite the fact that it's run up significantly, I would still consider it as a medium to long-term investment, considering the fact that this growth trajectory is definitely going to be maintained. We believe the hospitality and the travel market continues to be buoyant. I think both in the domestic market as well as people who are coming from abroad, the foreign tourists. And this cycle is going to continue for the next 2 to 3 years because supply demand wise, supply constraints still continue. And I believe that, major events like World Cup, G20 have actually boosted India's image. We believe that the current year should also be equally good. As far as Lemon Tree is concerned, see, they operate in the accommodation, which is preferred by the middle class and the lower middle class, kind of customers. Most of the hotels are affordable segments, and they've also announced a very massive expansion plan. So I think, on the leverage side also, if you look at Lemon Tree, they've been funding a large part of their growth from debt. So I think we have not seen the full benefit of this expansion coming out. And obviously, in the initial years, the occupancy level is going to be lower. The cost of funding is going to be high. So until they scale up, I think you're not going to see any remarkable risk-reward return on Lemon Tree. Although longer term, yes, they are definitely a formidable player. But these numbers to get better will take at least maybe 12 to 18 months before we see the benefit of the expansion getting reflected in the revenue and in the cash flows.
Ajit, what are your top picks?
Yeah, so Samina, kind of consolidation that we are seeing. So barring banking, media are the sectors which one should be focusing on. And IT in pharma, metals is something that we are recommending to our clients. So both the recommendations are from those preferred sectors. So first one is HCL Tech. So it's the outperformer within the large cap IT basket, and the stock is trading at the record highs. In fact, we have a fresh consolidation breakout in HCL. And this pause that we are seeing today is in a buying opportunity in case if you missed the chance earlier. So 1590 should be a stop if we are planning any fresh trade in HCL, with 1670 being the target area. And another stock that we like from the metal space, the steel-related counters, they have done exceptionally well, especially the PSU's name. And now we are seeing the same momentum cascading to the private players. So JSW Steel, after this recent correction, it has formed a strong base around 800 mark, and now we are seeing the recovery. So 880 is something that we are eyeing in a day or two, and your stop should be at 820 for the buy position.
That's two buy calls coming in, HCL Tech and JSW Steel for the short term on the charts. Just a little bit of a detour, actually not really a detour, but the brokers body, I believe, the Association of National Exchanges Members of India, has approved extension of trading hours of derivative segments. Saloni is joining us with more details on this. Saloni, this was the big story this morning. You want to build on it for us?
Yeah, sure. Samina, brokers have finally agreed to, have certain recommendations to be sent to SEBI. Now, why is this important is because last month, SEBI chief as well as Brokers Association said that, they were having issues to have a proper discussion to come up with the recommendations, as there were issues with relation to small brokers who were saying that there might be, issues when it comes to operational matters as to how operationally it would work, especially for small brokers, given the bandwidth that it will require. Also, issues related to the margin, which may arise post the introduction of the extension of hours, and also issues related to price settlement that needs to be sorted out. So now all these apparently are something that they have discussed and they have put it on in the recommendation, and they are planning to send it today to the market regulator. Now, just to give a context, NSE had proposed the extension of trading hours, and they had also proposed to continue between 6 and 9 p.m. Now, the timing obviously will differ as to what the recommendation is and what SEBI sees it's suitable. So that's something we have to watch out for. Also, this is not exactly the approval or of the proposal, because SEBI first will evaluate, will talk to investors and have a consultation paper out, and they will have discussions with the public feedback as well. And after that only will we see if this is something that's feasible with the current recommendations that we have or not. Also, once the recommendations is out, we'll also have it, point by point if it makes sense or not also.
Right, that's of course the back and forth on extension of trading hours in the derivative segment. Remember, this has been the offering for the last decade, but I guess getting closer as we speak. Well, Avinash, one more stock that's definitely worth a mention is Trent. Stock is up 18%. Excitement is very evident on the street in terms of what this company has reported. Outlook is also looking very healthy for the company. Numbers have also been pretty phenomenal. What do you do with Trent? Do you think a lot of that is already in the price and this is a knee-jerk reaction, or would you still consider buying Trent or adding it to your portfolio?
I think Trent is one of those retail companies, where we believe the numbers have actually been very stellar and very robust. I would not be surprised that, considering the kind of, geographical network they have, the kind of product they cater and the kind of customers they have, I would not be surprised that even next year could be a very strong year for them. So I think, in these kind of companies, rather than taking a short-term call, if you've got the next 12, 18 months in mind, any correction should be used as an opportunity to buy. Any dip in the market for whatever reason should be used as an opportunity to add to your portfolio. Even investors who can buy now can expect a decent 15-20% upside over the next, say, 18-24 months. So this is a quality stock, again, a very top management, and most importantly, numbers which they have delivered actually shows the scalability kind of potential for this business. I think within the retail space, this has got the best opportunity to outperform. But I think you need to give in a little more time because the stock has moved up quite significantly. So I think it will consolidate for some time. But longer term, I think we could see further value upside from the current levels.
Ajit, on the charts, what do you make of Trent? Nearly 18% higher as we see it. In the last 1 month, returns have also about 20-odd%. 6 months, it looks phenomenal. At 3568, further upside likely?
Certainly, Samina, considering the kind of volumes that we are seeing today, average we usually see around 12 lakh shares trading, and today it's already crossed 50 lakhs mark now. So this shows serious interest, and the way we are ending the session with the stock around the record highs, obviously there's a possibility that we might inch toward, maybe closer to 38 or 4,000 mark. Now, for the traders at least, this one thing that they have to keep in mind if they are planning any trade is that stock should not come below 3,300 mark now, because below that it might again fizzle out and lose the momentum. So as long as we are holding above this mark, yes, one can continue to look for buying opportunity on dips.
That's the word coming in on Trent. Niraj, you want to come in on Trent?
No, nothing.
Phenomenal performance.
The number of people who are buying supposedly in Zudio and how well it's performing, right? Quite stunning.
And that reflects in the stock price. We'll take a quick break. The markets are off the day's low, but still really trading sideways, consolidating after a very sweet trade we saw yesterday. We'll slip into a break. We'll come back and continue our conversation, so stay tuned.
Back with India Market Close right here on NDTV Profit. Two sets of stocks seem to be doing well today. One on the index, we are seeing the Aditya Birla Group stocks as a pack move up. Hindalco, Ultratech and Grasim have moved up. And as Samina said, at the broader end of the spectrum, the Adani Group stocks are making a bit of a comeback or making a strong move rather. Comeback is a wrong term. Ajit, I'll first come to you on, let's say, Adani Green, Adani Total Gas, and a big breakout move in green in particular. Are there more legs? Do you see that on the charts?
So Niraj, just to put you things into perspective, we have reached to that mark from where we started seeing this decline. So 2000 was the level, in January 2023, and we have retested those levels. So once we surpass this zone of 2000, I feel there could be a next leg of the up move in Adani Greens, which could help the stock to again inch towards its record highs. Since we have negated the overall decline, it took us nearly over a year now. So I feel that there could be a bit of a breather, considering that it's usually the trend that once we reclaim the critical hurdles, stock or index spend some time. So there could be a possibility that we might take a breather around the 1950-2000 levels. But yeah, the tone is likely to remain positive, and the volumes indicates that 1750 should hold now. So 1750 to 2000 is something that we are eyeing, at least in the near future, could be the range. Once we cross this mark, 2000, then definitely it will be a different story altogether. So yes, you can continue to hold your longs with 1750 being the stop.
Okay. Avinash, to you, either Adani Green if you have a fundamental view. If not, give me a view on, let's say, Hindalco.
No, I think Adani Green, my sense is, looking at the kind of opportunity in the solar space, Niraj, what Modi ji has announced post the Ayodhya Ram Temple inauguration. I think clearly the government's focus on renewable and green energy is increasingly getting more and more stronger. And I think in that aspect, Adani Green definitely is a very dominant player. And I think, despite the fact that numbers have not come in, they have a large capacity to scale up. And that is something which the markets is quite positive. So I think, now the markets are just playing on the narrative. I think numbers will follow very soon. As far as Hindalco is concerned, we still continue to believe that, we would probably wait for another 1 or 2 quarters before we see very strong numbers coming in. The last quarter numbers were definitely good. No doubt about it. But I think clearly, globally metal prices the way they are, my sense is that only sustainability of these prices would give us more comfort. So as of now, we are not very positive on the metal sector. We believe that, more importantly, the capital goods or maybe, the building product sector, these are sectors which are more interrelated to the infra space. Cement is also a very interesting opportunity. So, there are many other choices which are available compared to metals.
Okay. Well, another stock in focus after posting a really strong set of Q3 numbers is EIH. The stock is up 20% at all-time highs as well, up nearly 150% in a year. Actually, it's 17%, so not exactly 20%, but almost there. Anushi is here to give us the details. And Anushi, what have been the highlights of this EIH quarter?
Right. So if you had to look at the results, there has been a good set of numbers beating market expectations. You can see our revenues uptick about 26% at rupees 741 crore. But the main focus should be on the EBITDA and the EBITDA margins over here, with the EBITDA gaining up to like 55% and margins inching up by about 811 basis points to 44% compared to 35% earlier. So even the net profit has seen about a 52% uptick. So what explains this is, one is the occupancy rate has moved up now to 79% compared to 77%, so a 2% change over there. Again, what is impressive is the ARR. So in the hospitality segment, we are seeing this overall trend of increasing average room rates, wherein EIH has recorded about a 19% growth at about 19,985 rupees. So accounting for both of these, even the RevPAR, the revenue per available room metric, has moved up to 23% this quarter. bigger focus should also be on the debt reduction strategies that the company has been making. So since June 2022, it has maintained its net cash positive status with a net cash positive status of about 684 crore this quarter in the December period compared to about 256 crore last year. Again, for future triggers, what should be watch out is the foreign tourist arrivals, which are still below the pre-COVID level. So this gives them more headroom to grow. And again, the expansion plan that the business has outlined for adding up to 50 hotels by 2030. So that should again be on a watch out. Stock performance, you correctly mentioned, Niraj, that it has gained about 150%. So EIH is on a lookout on basis of these numbers.
Indeed, it's been a star performer, one of the top, in fact, the top gainer in the broader markets in today's trade. Another one, Avinash, Paytm. There's been so much news flow, largely negative. On Friday, of course, when the stock had corrected sharply, you had Morgan Stanley Singapore arm, pick up the stock at levels of 480, 487. It's trying to, do a recovery. Do you feel like it's found a little bit of a bottom at this level? Fundamentally, is there enough reason to go out and buy Paytm, value buying? I don't know. Is that how you feel?
No, I think my guess is that, this is a simple bounce back which has happened. A stock which has fallen by almost 50%. Bounce back is obviously quite natural. But I think the key question which markets want to know is that, earlier they had given a narrative that possibly they would become EBITDA positive very soon. Now that obviously is going to be a little tricky because after February 29, when the Paytm wallet is off, that's going to obviously, upset their revenue stream, their profitability. So I would say that, a little more clarity needs to come beyond February 29th. In fact, there have been some reports that some solution might be worked out by RBI in the near term. So once the solution comes in and the markets is confident that this kind of, a regulatory kind of compliance issue is handled properly by the company, at that point of time, I think it would be better to jump in because, even as of now, there's a lot of uncertainty surrounding Paytm. So I think clearly it's better to wait and watch rather than making a call at this point of time.
And wait and watch. On the charts, Ajit, do you feel like the stock has made an intermediate bottom? Not betting on a big sort of recovery here, but for the interim, do you feel like it's found a little bit of a floor?
So, Samina, volume says so. Considering that the recent volume on the first day when the circuit opened, it was almost like 6 times of the average volume. So, in technical terms, we call this as a selling climax. So yesterday's close and today's circuit indicates that yes, there's a possibility that we might see this rebound extending. But as Avinash rightly mentioned, that the uncertainty is still looming over the regulatory. So the prudent approach, especially in the market like this, when the index is trading at record highs and we are seeing decent stocks and sectors to trade in, I feel that traders should avoid any fresh positions at the current level. Those who are stuck, and they have made any trading bets, 450 should be their stop. In case if it again slips below this mark, they should definitely exit.
Okay, well, I think that's the long and short of it. The other stock that has moved up quite a bit, and before we hit that break, I think we should capture this story. It's arguably the top headline from the M&A space, or the M&A space that could have been but hasn't. TRF has called off the merger with parent company Tata Steel. The stock has risen 20%. Varsha joins us to tell us why this move, and on both sides, why is the stock done so well, and why is it that they pulled the plug? Varsha.
So if you see, TRF has hit 20% upper circuit now after its merger with Tata Steel calls off. Now the merger announcement was made back in September 22. Since then, Tata Steel has been giving operational and financial support to the company. Now Tata Steel says that TRF is witnessing a turnaround in its business, so maybe amalgamation is not needed. But if you see from TRF perspective, when merger was announced, the swap ratio was not favorable. So TRF shareholders were to get 17 shares of Tata Steel for every 10 shares held. Now, if you see why stock price is up 20% today is, so considering yesterday's closing price, if this deal were to happen, the shareholders of TRF would have lost almost 10% in trade. So, which is I mean, so this is a reason why the share price is up 20%, because now the merger has been called off, so that 10% loss won't be to shareholders. Yeah.
Right, we will, thanks Varsha for that. We will of course talk to Avinash and Ajit about TRF and of course the stock movement. But we'll take a quick break before that, and while we do that, listen into what RBI Governor Shaktikant Das had to say about inflationary targets for next year at the World Economic Forum in Davos.
You see, immediately after the Ukraine war, our headline inflation had touched 7.8%. Now, thereafter, because of the monetary policy actions which we have taken, which was also supplemented by, aided by the supply side measures taken by the government, inflation has been steadily coming down, and we are on our way to reach 4% target. But next year's average is expected to be 4.5%. The positive aspect of it is that our inflation is now well within the target band of inflation, but we are not satisfied with that. We would like our inflation to reach 4% and remain around 4%. Just let me complete that bit. So therefore, that is our endeavor. And the core inflation, the core inflation has now come below, marginally below the 4% headline target. So we expect next year's average inflation to be 4.5, inflation to steadily moderate towards 4%.
वर्ष में हमारे 10 वर्ष में पीएसयू की नेट वर्थ 9.5 लाख करोड़ से बढ़कर के 17 लाख करोड़ हो गई है। आदरणीय सभापति जी, इनका हाथ जहां भी लगता है ना, उसका डूबना तय हो जाता है, और उससे यही दशा करके उन्होंने छोड़ी थी। हम मेहनत करके इतनी बाहर लाए, इतनी प्रतिष्ठा बढ़ी है। आपको खुशी होनी चाहिए, भ्रम मत फैलाइए, बाजार में हवा ऐसी न फैलाइए कि देश के सामान्य निवेशक के मन को उलझन में आ जाए। ऐसा काम आप नहीं कर सकते। आदरणीय सभापति जी, इन लोगों की मर्यादा इतनी है, अब इन्होंने अपने युवराज को एक स्टार्टअप बना करके दिया है। अभी वो नॉन स्टार्टर है। न तो वो लिफ्ट हो रहा है, न वो लॉन्च हो रहा है। आदरणीय सभापति जी, आप पिछली बार भी इतनी शांति से रहे हो तो कितना मजा आता। आदरणीय राष्ट्रपति जी, आदरणीय सभापति जी, बधाई हो, बधाई हो, बधाई हो, सबको बधाई हो। आदरणीय सभापति जी, मेरा सौभाग्य रहा कि मुझे लंबे समय तक एक राज्य के मुख्यमंत्री के नाते देश की और जनता की सेवा करने का अवसर मिला, और इसलिए मैं रीजनल एस्पिरेशंस को बहुत भली भांति समझता हूं, क्योंकि मैं उस प्रोसेस से निकला हूं। जैसे हमारे यहाँ दिग्विजय जी, उनको भली भांति सहज समझ आता है भी एक राज्य के लिए क्या होता है। हम लोग उसी दुनिया से निकल करके आए हैं, तो हमें अनुभव है, पता है। शरद राव जी को है, तो ऐसे कुछ लोग हैं यहाँ जिनको ये सारी चीजों का पता है। देवगढ़ा साहब है, तो इन लोगों के इन सारी चीजों का पता है, तो हम इसका महात्मा समझते हैं। हमें कोई किताबों में नहीं पढ़ना पड़ता है, हम अनुभव कर करके आए हैं। और ये भी सच्चाई है साहब, 10 साल यूपीए की पूरी शक्ति गुजरात को क्या कुछ न करने में लगी हुई थी, आप कल्पना नहीं कर सकते। लेकिन मैं आंसू नहीं बहाता, मैं रोने की मेरी आदत नहीं है जी। लेकिन तब भी उतने संकटों के बावजूद भी, उतने जुल्म के बाद भी, हर प्रकार की मुसीबतों को झेलते हुए भी, मेरी तो मुसीबत ऐसी थी कि यहाँ किसी मिनिस्टर से मुझे अपॉइंटमेंट नहीं मिलती थी। वो कहते थे, भाई आप जानते हो मेरी तो दोस्ती है, मैं फोन पे बात कर लूंगा, लेकिन कहीं फोटो वोटो निकल गए, ये डर रहता था। यहाँ मंत्रियों का डर ऐसा था। अब खैर उनकी मुसीबतें मैं समझ सकता हूं। मेरे यहाँ एक बार बहुत प्राकृतिक आपदा आई, मैंने उस समय प्रधानमंत्री जी को बड़ा रिक्वेस्ट किया कि आप आइए, एक बार जरा देख लीजिए। उनका कार्यक्रम बना, फिर साहब एक एडवाइजरी कमेटी बनी थी ना, शायद वहां से हुक्म आया, तो कोई हेलीकॉप्टर से हवाई निरीक्षण करे वो तो मैं समझ सकता हूँ। साहब वो कार्यक्रम बदल करके साउथ में किस राज्य में गए तो मुझे याद नहीं रहा आज, और बोले हम हवाई जहाज से ऊपर से देख लेंगे, हम गुजरात में नहीं आएंगे। मैं सूरत पहुंचा हुआ था, वो आने वाले थे, मैं जानता हूँ आखिर में क्या हुआ होगा। तो आप कल्पना कर सकते हैं साहब, प्राकृतिक आपदा में भी मैंने ऐसी मुसीबतों को झेला है, लेकिन उसके बावजूद भी उस समय भी मेरा मंत्र था, आज भी मेरा मंत्र है कि देश के विकास के लिए राज्य का विकास, भारत के विकास के लिए गुजरात का विकास, और हम सबको इसी रास्ते पर चलना चाहिए। हम राज्यों का विकास से ही राष्ट्र का विकास कर पाएंगे, इस पे कोई विवाद नहीं हो सकता है। कोई विवाद नहीं हो सकता है.
All right. Well, that was interesting. But the health of PSUs, and it's kind of shining through the last few days. PSU banks clearly are still standing out. You know, this morning on Talking Point, we put out a graphic plate which showed, I don't know if you can pull it up, but we should put out a graphic plate which showed how PSU banks versus private banks, the gains over the last 5 years have been just exceptional for PSU banks relative to private banks as well. It's just an index of the PSU bank index versus the gains for the private banking space, and quite exceptional really the gains that we've seen there. Avinash, I don't know if we spoke about PSU banks on the show, but here's my question. SBI leading the way today. This is the plate that I'm talking about. Look at that returns that the Nifty PSU bank versus the Nifty private bank index, 1 year, 3 year CAGR or 5 year CAGR, has just been exceptional. Avinash, is the time ripe for a turn of fortunes wherein private banks which have been lying so low could come to the fore, or do you believe there are PSU banks, Canara Bank is about 1 times book, some others might be 1.2 times book, that there is still more juice for the PSU banks versus the private banks?
No, definitely, Niraj. I think, the banking system and the PSU banks have over the last 5 to 10 years completely transformed. The legacy assets, the non-performing assets which they had. I remember, banks like IDBI Bank and Indian Overseas Bank had got asset qualities of as high of 25%. Now, today, it's a completely different story. The frontline banks like Canara Bank, Bank of Baroda, SBI, in fact, even PNB has done remarkably well in terms of numbers. So I would believe that, there's definitely a large amount of scope to get further re-rating in this pocket, because this pocket has still remained a little subdued if you compare to the other, kind of sectors which have outperformed. My sense is that, this may be a little slow and steady kind of sector, but it is a very important sector for the economy, with a budget of almost 11 lakh crores outlined on the capital expenditure side. My sense is that banks would be getting definitely, a lot of business, both from corporate capex as well as government capex. And I think on the financial services side, many banks have diversified into other good businesses. So that actually will add to their bottom lines and their, revenue numbers. So typically, somebody who's got a long-term vision of at least a couple of years, I would not be surprised that there's a lot of professionalism, there's a lot of accountability now which has come in the PSU banks, which earlier was not there. So SBI, despite slightly disappointing numbers, our sense is that asset quality, the loan book growth, the deposit growth, these variables were very strong. And I think there was some one-time provisioning which impacted the profitability. So I think investors who want to take a longer-term call can still look at PSU banks if they have at least a 18 to 24 month kind of timeline. Because as Indian economy grows, I think the banking system is bound to grow.
Okay. Well, the banks are certainly a buzz to the PSUs in particular. I don't know if they form a part of some of the key movers on the FNO side. SBI certainly might be. Let's actually ask Agam what's standing out in the FNO space, index-wide as well as on specific stocks. Agam, good afternoon.
Good afternoon. Well, it is the Nifty Bank options weekly expiry. So, but it's been a quiet one so far. But I'll talk about options in just a bit. Let's address what's happening in the index futures, and it's flat as far as the Nifty is concerned. Not too much added as far as open interest goes. The Bank Nifty, of course, is advancing by around 0.3 point, but not, again, about less than 2% added in index futures. What potentially is longs, at least at the moment. But in terms of options, of course, as far as Nifty is concerned, we are continuing to see a lot more traction in terms of puts. As you can see, the red bars, where we have seen a little bit more resistance building around 21,700, 21,800. And in terms of your overall open interest picture, currently still we haven't seen too much of a change. So we're still looking at approximately an 800 point odd range as we move into trade tomorrow. Let's talk about the Bank Nifty and how things have shaped out there. And of course there, well, we have seen the Bank Nifty hover around 45,800, and that's where about we're most likely to see expiry come through. Finally, in terms of stocks, let's pull up that list. And so we do have longs in Delta Corp and Trent. And of course, Naveen Fluorine under pressure because of a whole host of broking notes coming through with cuts in price targets. And in terms of stocks, we're just seeing unwinding. Let's pull that up as well. So short covering for Chambal Fertilizers, HDFC Life, as well as ABB. So keep an eye on these names as we move into trade tomorrow.
Okay, thanks a lot for that. So, trade tomorrow is also punctuated by the RBI's MPC meet, and economists expect the vote to be in favor of the status quo. More importantly, what the commentary could be is something that is in focus. But Pallavi Johnson with more on this. Pallavi.
Hi Niraj, you're absolutely correct. The India's Monetary Policy Committee is set to announce its decision tomorrow. Now, we already know that it's likely to be a status quo both on the key lending rate as well as the stance. In fact, all 42 of the economists polled by Bloomberg expect a status quo. But that's not to say that it's going to be a dull or a boring MPC. We'll watch out for the governor's commentary, whether it's going to be a tad less hawkish. We're also closely going to be tracking what the central bank has to say on key variables, the economy, inflation, and of course liquidity. That's likely to be in focus tomorrow. Liquidity conditions have been persistently tight since the last policy, and it is likely that the central bank will continue its active presence in liquidity management, addressing it through measures like the VRRR. We've seen a lot of that of late. Inflation, of course, remains above the 4% target of the central bank. In December, it came in at 5.69%. That was because of elevated food inflation, while core inflation continued to provide a sense of comfort. What we've also seen a change from the last policy is that the commentary on the economy has just continued to get better. We saw the first advanced estimates by the government presented for the preparation of the budget, and those surprised on the upside, and continuing in line with that, we're expecting positive commentary on the economic front as well.
Okay, we will watch out for that. Thanks a lot for that, Pallavi. And things around Paytm, things around PSU banks, what's happening there would all be top of the mind tomorrow. In fact, PSUs have been on a rise for quite some time. What are the key themes to play under the PSU umbrella? We spoke to Sridhar Sivram of Enam Holdings earlier in the day. Here is what he had to say.
The power sector looks very exciting. I mean, this has been a sector which has been ignored for a long period of time. I would say everything in the power sector is looking good. Even the thermal side is looking good because India is underinvested in thermal. We are literally hitting peak capacity every day during the peak hours. So we are seeing companies scramble to put more thermal. We will double our wind capacity in the next 3 to 4 years. We'll triple our solar capacity in the next 3 to 4 years. So in the ecosystem, there is lots to play in this. So I'm saying in the entire power space, be it thermal, wind, solar, there's lots to play because the government is also playing favorably, which is they also want the commitments that they have kept globally on moving green. They want that to happen. So I think this is a space to be watched out, and entire ecosystem, I mean, individually people have to figure out what is to be played, but I think this is a space which we remain quite bullish on.
Okay, about time to get in closing strategies from our experts as well. Actually, I haven't taken a fundamental call. Avinash, can I come to you first? What is it that you've seen recently that you have thought of investing money in or have invested money in?
In fact, Niraj, we have been very positive on the real estate basket, and one company which is Anantraj from Gurgaon, we have been investing in this company long time back. The company came out with its Q3 numbers yesterday. Very strong set of numbers, despite the fact that post results, there has been some selling. But we believe that this year the profitability will be around 230-240 crores compared to 150 crores last year. And I think the cherry on the pack is basically the data center business. The data center business is now getting scaled up to 21 megawatts. And we believe that this is going to be a very strong earnings trigger for the company because there are very few companies which have got a 300 megawatt installation capacity. So I think this is one company where I believe the real estate market, the real estate business will be the cash cow, but the data center business is the growth opportunity. So we are looking at a target price of around 375, 380. And the other company is a small specialty steel company recommended earlier, Kalyani Steels. Now, this is a company which caters largely to Bharat Forge's requirements. Very stellar set of numbers. The company should be posting earnings of almost 60 rupees in the current year and hopefully around 73, 74 for FY25. So, it is not a commodity play, a virtually debt-free balance sheet with 600 crores of cash and very strong ROE, return on capital employed numbers. So I think here we could look at a target price of around 750, 800. It's moved up from 680 odd levels, but I still think, on any dip it should be acquired and, added to your portfolio.
Okay. And came out with good results as well, so keep that in mind. Those are a couple of ideas. A closing strategy as well from Ajit. Ajit, maybe a BTST or STBT as the case may be?
Yes, Niraj. So DLF, in fact, in today's trade, we've seen a sharp breakout with volumes, and now we feel that the only resistance that we have is the record high area, which means is going to be a multi-year high in that case. So I feel DLF still have more legs up legs from the current levels, and with the kind of sustenance post breakout that we are seeing in the price, we believe that maybe 860, 880 is going to be the next target area. So the risk reward is still favorable. So 810 should be the stop, and one can wait for 860 to 880 levels in DLF. And apart from that, Ultratech Cement from the cement basket is finally, swinging into the action, and the way we are closing today, there's a possibility that stock might retest the previous swing highs close to around 10,500, 10,600 in the near future. So this is also something that one can add to their basket with the stop at 10,100.
Okay. Well, so that's a view on a couple of these BTST ideas as well. DLF seems to be a common name there. So do keep an eye out for that one. What else? I mean, today, so by the way, some news flashes on your screen about Mankind Pharma promoters to sell stake from tomorrow onwards till the 15th of February. It's a small percentage stake, 1.5% or thereabouts, just to bring down a shareholding to comply with the minimum public shareholding norms. But it's a stock that has had standout results, if you will, this quarter as well. And it's a business that has added some significant cash on its books. The cash on the balance sheet doubled from March 23 until the quarter gone by, 9 months. So it's just a cash generating machine, if you will, is Mankind Pharma, if the last 12 months are anything to go by. Any thoughts here, Avinash? There's maybe some technical pressure likely tomorrow. For now, the stock is not reacting negatively at all. But fundamentally, is Mankind Pharma a good business, or you would probably look at others?
No, I think they've been delivering very strong numbers, and I think this is not a pure pharma play. It is like a pharma and FMCG kind of play, where basically they operate on a fairly low asset kind of base. So my sense is that the kind of products which they have and the kind of scalability potential which they have, I think are in pockets where the pricing power is quite solid, and where I think margins would continue to get better. As far as tomorrow's sell out by the promoters, it's a very marginal kind of stake sale. It does not make any impact, but if it does any impact on the negative side, I think investors should use this opportunity to accumulate the stock. We believe the next 2 years are going to be even more stronger for the company. So I think any decline in this stock, obviously anybody who's got a long-term kind of view can definitely look at adding it on any decline.
Okay. Point well taken. What is not done well is actually Naveen Fluorine. Pull up that stock once, just to show you how it's ending. If not at the lowest point of the day, then certainly at the lower part of what it has done for a better part of the trading day today. Anushi Johnson with some of the views that have come in post this quarterly numbers. Anushi, tell us.
Right. So as we see, revenue, EBITDA, and margins, all three measures took a beating over here with, but net profit though was able to beat the estimates. But do note that this was on the back of an exceptional item worth 51 crore. So if we have to look at what happened was the slow ramp up in HFO plant, which was one of the factors which led to this slowdown in the revenue growth. Along with this, the pricing pressure in the R22. Another factor that we should watch out for is the postponement of sales that happened for its key molecules in the CDMO business, but the management remains optimistic that they are going to make a strong comeback in FY26. So based on the results, there have been 2 brokerage reports in which Jefferies now have a hold rating for the same, but have reduced their price target, whereas Citi also currently has a buy rating, but has similarly reduced their target priced to about 3,750 now. So both have cited again the same reasons, that they are expecting this delay in the delivery schedules of its special chemicals which is going on. Along with this, pricing pressure in the R22 was another factor which led to this reduced rating. So this was on Navin Fluorine.
Okay, thanks a lot for that. Now, we're talking about PSU banks. It's not just SBI. Anushi, thanks for that. So that is doing well. At the same time, there are chemical companies like Navin Fluorine which are not doing well. IOB, by the way, is up some 20% if I'm not wrong. So it's an interesting mix of companies which are moving up on news or sentiment versus the ones which are correcting on results as well. A technical and a fundamental view before we close the markets. Fundamental view from Avinash first on Navin Fluorine. Is the pain in the price, or are there better chemical companies? Because this one doesn't even have an MD. They are still searching for one.
No, I think, Niraj, if you look at the last 2 quarters, numbers have been pretty disappointing. And I think I still feel that, at these valuations, it appears slightly pricey. So I wouldn't like to buy the stock at the current odd levels, considering the fact that, FY25 is also going to be a challenging year. Whatever recovery is going to happen, it is going to take off in FY26. And the current price is something which still looks pretty expensive. So I think, within the chemical space, we would prefer something like an Aarti Industries, or typically, auto ancillary company like Phillips Carbon, PCBL, which, obviously makes carbon black, and is not directly a specialty chemical company. But numbers here have been pretty stellar. And I think the markets have already rewarded the stock in terms of a re-rating. But going forward, looking at the kind of water treatment business which they have acquired, I think that is going to be the next trigger for growth. So I think Aarti Industries and PCBL, these could be better bets as compared to Navin.
Okay, some flashes on your screen about the life insurance premium, first year premium for insurers being up. 23% for LIC, if I'm not wrong, 31% market-wide. And I think that is probably one reason why you've seen the life insurance companies. They'll probably come up on the screen here. Maybe we can pull up LIC, HDFC Life, and some of the others. And there's a sharp move there on some of those stocks. And like I said, IOB too, from the non-insurance space but banking space, which has done very well. So Ajit, before we wrap up, quick view here because we're very close to market close. 30 seconds. Any of the life insurance plays, and if not that, stocks like SBI or IOB, would you carry home the longs?
Certainly, Niraj. So in the life insurance space, SBI Life is one consistent name that we didn't see much participation on the downside, and in fact the stock is trading at the record highs. Today it's ending on a flat note, but the kind of consolidation that we have seen almost like a month indicates a possibility of further up move. So yes, among all these names, SBI Life is one candidate that one can definitely look at, with 1420 being the stop, and close above 1500 might result in up move towards 1650 plus zone.
Okay, gentlemen, both of you, thank you so much for taking the time out and being with us on the show. Really appreciate your time. But let's wrap up the markets on the note that the Nifty is flat, but the market is not devoid of individual action. There's some serious movers at play in the session today, and that's been quite exciting to watch. Bring up the heat map, and let's just, we've kind of shown you what the stocks have done, but what's happened is that SBI has only further strengthened its move, and it's ending about 4.2% higher. So really strong show put up by SBI. And what's also happened is that Tech Mahindra has overtaken everything else and is now the top loser on the index. So we spoke today on the trade setup that it's very difficult to find reasons for why IT could be doing well continuously. And at close, IT is sulking. Tech Mahindra, Infi, TCS, Wipro, well, all of them. HCL Tech down about 0.5% as well. I know Ajit Mishra mentioned that he might want to go long on HCL Tech, but for now, they are sulking. That's the point I'm making. Power Grid is the other one which is down about 2.5%. Adani Ports has a down day today. So from amongst the pack, while others have done well, Adani Ports hasn't. Is down about 1.3%. So that's a bit of an issue there. And like I said, the Aditya Birla Group has had a good day today. So Grasim, second best performer. There's also strength, I believe, in Ultra Tech, which is about 1.8%. And somewhere I had also seen Hindalco. I don't see it right now, but Hindalco was amongst the top movers, and it is just up about 0.5% right now. must thank my production team for intimating me that it's on the third row. So that's the long and short of what the large caps have been. Just mark Nifty Realty if we can and get the gainers before we wrap up, because I think if you look at the broader end of the spectrum, either Nifty PSU or Nifty Realty or Nifty PSU Bank, as the case may be, any of those would just give us summation. But if we can get the winners and the losers on Realty and either PSU index or Nifty PSV Bank index, here, look at the kind of gains that a Phoenix, DLF, Sobha, etc. have shown. And then let's try and pull up any of the PSU indices. Nifty PSC is great. There is weakness in some of the oil marketing companies today, but BPCL and HPCL. But look at Power Finance, look at Oil India, REC, and the PSP public sector banks essentially, which have had a great day. So all in all, not a bad close, more so for the broader end of the spectrum maybe than the large caps, but a penultimate day to policy. I think this is something that we would have accepted. From all of us who have put this show together, thanks so much for watching.